All right, we are live. Hello, everybody. It's Matt and Chill from the Open Economy Initiative. We are very glad you decided to join us on the weekend. We usually don't do weekend streams, but since we have a bit more of an international audience for this event, we decided we'd do it at a time where most people should be able to attend regardless of your time zone. So, and looks like we've already got a question in the chat. Will this presentation be available for later viewing? It absolutely will be. The recording will be right here on our channel at the exact same link that you're at now. When the stream's done, if you come back to the same URL, it'll just show you the replay with chat and everything. And if you have a question, pop it in the comments down below. If you're re-watching the stream, rather, put it in the comments and we'll absolutely get an answer for you. But yeah. With that, I mean, we've got a lot to cover, so I'm kind of like, you can tell I'm a little anxious. I want to just like get this thing started. Probably going to go about an hour of presentation on this topic, since it's pretty, there's a lot of information to cover, I guess is the best way to put it. Then we want to do about 30 minutes of questions at the end. During the presentation, if you do have a question, throw it in the chat and we will come back to it. We're just not going to answer it at the spot. We're going to answer everything at the end. So we'll scroll through the chat at the end of the presentation, but feel free to pop your questions in there. And then if somebody, somebody who's also in the chat has an answer, maybe they'll answer it for you. And if not, we'll get to it there at the end. So yeah, I'm going to do a quick plug for the Open Economy Initiative and then we'll hop into it. But basically the OPI, Chill and I are the founders of the Open Economy Initiative, and we're on a mission to drive crypto commerce through education. To that end, we've got 2 courses up on Udemy: How to Buy Bitcoin the Right Way, which is just how to buy Bitcoin using cybersecurity best practices, get a hardware wallet, transfer the hardware wallet, set up the exchange, all that good stuff, be safe while you're doing it. And then we also have how to get involved with DeFi, just a really basic primer on that. What are loans, lending, borrowing, yield farming, flash loans, and the different platforms that you can use, and liquidity pools, and using decentralized exchanges to trade like Uniswap and whatnot. So good primer on that. Check that out on Udemy. If you go to theop.com, you can see the links to the courses there. Just search Open Economy Initiative on Udemy. You will find it. So yeah, with that, I don't know, Chill, do you have anything you want to say before I just launch into it? I'm really
just launch into it. We have a lot to cover.
We do. And yeah, and this presentation is kind of interesting how this came together. So Chill and I do some consulting for our for-profit business at Will and Reimer Consulting. And we've just been getting a lot of questions about people wanting to set up exchange, or a lot of clients inquiring about how do I set up an exchange? How do I incorporate a blockchain, corporation or company or project? How do I set up a wallet? And so, over the course of helping those people, we had to obviously figure out how all of this stuff works, and that's basically where this presentation comes from. Is us, doing research and reaching out and trying to make sure that our clients are getting the best value and getting the right information so that they can make an informed decision. So yeah, that's sort of the genesis for this, and we wanted to share it with everybody. Just make it free and available. So if you're interested in doing this should at least get you pointed in the right direction. And then obviously, if you have any questions about it or want to take it a little bit further, you can reach out to us, and we're more than happy to help you. So yeah, I think that's all the plugging I need to do right now. So we're going to share the screen here and just get after it. All right. Share my screen here. All right. Hopefully everybody is able to see this. Does it look good, Chill? Are we good?
Yeah, it's perfect.
All right, awesome. Okay, so this is our presentation on forming a blockchain company. we're going to be covering basically the considerations for the company that you should take into account, before you kind of move forward with this. I'll be presenting on that. And then the regulatory considerations, which Chill will be presenting on in the second half of the presentation. We want to make sure that you kind of have an idea of the types of companies that it makes sense to go this route with. A typical company, it doesn't really make sense to do that. So I'll cover kind of the types there. The platforms that you can use to build on, tokenomics, if you're building something that's going to be publicly tradable, and then costs and more development costs. Chill's going to talk about costs for regulatory paperwork and filings and lawyers and all that stuff. I'm going to keep it more of the technical stuff. And then, on the regulatory side, just locations to incorporate, kind of time frames that you're looking at to get all the paperwork filed and approved. And then talk a bit about the banking relationships, because unfortunately, we're all in crypto and we're excited about it. And it's, we want to get away from the banks, but the facts of the matter are that you still absolutely need to have a traditional banking relationship, kind of regardless of where you incorporate, if you're going to have, one of these types of companies that we're going to cover, which is a centralized type of entity. So that'll be what Chill's covering. And so hopefully you'll be able to take away this information, have a much better, a clearer idea of what it takes, how much time it takes, what the cost might be, and if it even makes sense for your idea to go this route. So Matt Millen, that's me. Chill Brimer, that's Chill. pretty self-explanatory there. So I'm gonna just get into it here. The first thing we're going to talk about are blockchain company considerations and the types of company, and that's where we'll start. And then the secondary, the platforms, the tokenomics, and the costs. These are kind of the three fundamental pieces of information that you really need to clarify before you get serious about this. So that's what blockchain platform will I be using? What will the tokenomics or the business model look like for my company? What's the supply? What's the issuance rate? All those types of questions. And then lastly, the third thing there is, how much is it going to cost me to build this idea that I want to execute? What are the developmental costs on the tech side? And then Chill will talk about the regulatory and the lawyery costs. Those are kind of the top three things that you need to consider. Obviously, there's other things, but that's where you want to start with those three. And in the following slides, we're going to kind of just dive into each one of those criteria. But where we're going to start is basically, what types of companies will typically utilize blockchain technology, and what types of companies are going to go this route. So there's kind of three, I put them in three buckets here. Obviously, this is not a comprehensive list. These are just the three most popular and probably cover about, I want to say 90% of the blockchain focused companies are going to fall into one of these three buckets. First one there is the exchange, where you're simply just providing a service for crypto to be exchanged for either another crypto or fiat currency. There's kind of two different types of exchanges in my mind. There's a fiat to crypto exchange and a crypto to crypto exchange. Some of them offer both. Coinbase, Kraken, they're going to offer you to trade one crypto to another, which is a taxable event, or they're going to allow you to exchange fiat for crypto, basically making an initial purchase of some cryptocurrency if you don't already have any, or exiting your cryptocurrency investment by selling it, which is also a taxable event. For fiat, and then obviously putting that back in your bank account. So those are kind of the two different types of exchanges. The ones that deal with fiat are much more heavily regulated. That'll be primarily what, I don't want to speak for Chill, but she'll cover a little bit about the regulatory hurdles for dealing with fiat, and what you need to do there. A lot more hoops to jump through if you're dealing with fiat. If you're just doing crypto to crypto, it's a lower barrier to entry. Still, some things you need to be aware of, but it's not as many hoops to jump through, just because it's not as regulated as the fiat world is. With that comes, increased risk, as hopefully any of you who've dealt in the trading or the exchange world know. the crypto to crypto exchanges go under way faster than the fiat ones, just because they're, you know, easier to set up, quicker to set up, and don't require as much effort for somebody who maybe has a malicious intent from the outset to get up and running of the crypto to cryptos. So just be careful. Take a minute to take a second there to just be careful if you're using crypto to crypto exchanges that are based outside the US. Okay, so those are exchanges. That's bucket number one. Bucket number two is going to be a wallet. So any kind of software or hardware really that provides custody over your cryptocurrency. They're wallets that you know, the company holds the private keys and the access to the cryptocurrency for someone. So you're custodying your users' funds. That's a lot more regulatorily intense than if you are just providing self-custody. So, you know, something like the Monero GUI wallet, you have your own private key for that. You, the user, are in custody of your funds. The Monero wallet is not providing custody for you. They're just providing you a method to access your cryptocurrency, basically. So those are kind of the two different types of wallets. If you're doing self-custody, then basically your code has to be so clean and airtight, and there can't be any type of exploit in it, because people are trusting your software with, you know, I mean, potentially millions of dollars. So it's got to be just very airtight and very well audited if you're providing self-custody for your users. And, you know, really honestly, the same thing goes if you are custodying your users' funds. It's a little bit easier because you have control over the private keys. So you really just need to make sure that you have a good way of securing those. But what does happen is you create a gigantic honeypot of private keys and user funds, basically, where it's, you know, attackers and hackers are incredibly incentivized to get into your server system and try and get access to that cryptocurrency. And that's, you know, where we get Mt. Gox, BTCE. I mean, even Binance was hacked last year, 2 years ago or something. They were able to make everybody whole because they had an insurance fund, which was good. But you know, these centralized exchanges or centralized types of wallets are going to, you know, yeah, it's just a big honeypot. And I just referenced exchanges, not wallets that got hacked, but it applies to either. So yeah, so that's the wallet bucket. The third bucket here is blockchain project. So that's most commonly just going to be a protocol for an existing project. So somebody that's building like a layer 2 solution, like Matic is for Ethereum. That's like a protocol, or it could be a completely new cryptocurrency. So, you know, I mean, there's tons of new coins coming out, but just a cryptocurrency that has its own separate blockchain. It's not an ERC20 token that's run on the back of Ethereum, or you know, some other, relying on some other blockchain for its basically security and consensus. It's its own thing, or it's a protocol that's built on top there. It's like some sort of layer 2 solution. So those are generally the most common types of blockchain projects. Obviously, again, this is not a comprehensive list. This is just sort of the 3 most popular buckets that cover the majority of the space and people that would benefit from the information that we're going to share. So yeah, that's company types. If your idea or the company that you want to form falls under one of these 3 buckets, then, you know, this presentation will be very relevant for you. If it doesn't, there's still a chance that, you know, you're just in that 10% that's kind of outside these 3 buckets. And, you know, if you have any questions about it, obviously just reach out to us. We're more than happy to do a brief call with you and determine, you know, whether or not this route is correct for what you want to do and execute. So just let us know. Yeah, so those are the types of companies. The next thing I want to talk about here are the platforms that you want to use. And so this is, you know, the 3 questions that you need to answer before you really get serious about this. This is the first question, is what platform do I want to build on? And it's going to be determined a lot by what, you know, your end goal is. So this information I'm giving you here is just kind of like a high level overview of the different choices you have. Again, this is not a comprehensive list. This is just the platforms that we're seeing a lot of people ask us about, or that we have just seen good things happen on and been a part of helping people build on one of these platforms and be successful. So I'll start with Ethereum because it's the most trusted platform out there to build on. They've got the largest community by far. They've got the biggest user base by far. I mean, probably over 80% market share. I think I'm being conservative there. But this is where the most money is. This is where the biggest audience is. This is where the most users are. This is where the biggest community is. This is where a lot of institutional and like outside money that's coming into the space is looking to, make an impact in the Ethereum ecosystem. So even if you don't use Ethereum, at a minimum, whatever other platform you go with, you want to make sure that in some way it is interoperable with Ethereum. They're the number one game in town, and it's not really even close, contrary to what crypto Twitter might make you think. And this is for building stuff on top of, like smart contracts, dApps, decentralized apps. Ethereum is kind of where you want to go. If you have something where you're trying to make a completely new transactional cryptocurrency that's quick and fast and scalable and costs a half a penny to send or something, I would say use Monero. But if you want to make your own, then you obviously aren't going to build on top of Ethereum. You're going to make your own kind of unique. You will make your own unique blockchain network and community. So this won't be really relevant to you. But for a protocol or some sort of DeFi product, or basically anything that's going to utilize a smart contract or be related to a financial instrument or have some sort of financial instrument type of utility, these are the platforms that you want to consider. So yeah, Ethereum, biggest and bestest, and you want to be interoperable with it. Polkadot is also very solid. They're coming online right now. They're definitely picking up some steam. They've got some hackathons going. They're out of the test net. They've been on mainnet for a while now. They're doing some pretty cool stuff. The tech behind it is very solid. Gavin, I forget his last name, but he was part of the Ethereum project, actually initially one of the co-founders, and he was with the project all the way up until its release. Unlike Charles Hoskinson, who made Cardano, which isn't even on this list because I'm not sure they're going to ever do anything interesting. But yeah, the Polkadot's backed by Gavin. They've got a parachain approach for improved scalability, where it's just kind of making a bunch of interoperable blockchains that are all kind of secured by the main Polkadot chain. And yeah, decent scalability. Theoretically, I think they haven't really been put under load like Ethereum has, but they look pretty solid. And they're definitely up and coming, starting to do some cool stuff. Very well funded. There's also the Binance Smart Chain, which has a large amount of value locked inside their ecosystem right now. I mean, Ethereum has way more, but I think BSC is in second place there. They're a little bit more, the control over the network is a bit more centralized than Ethereum, Polkadot, or Cosmos. It is run by I guess it's a subsidiary of the Binance exchange. They made a bunch of money on the Binance exchange, then they made like the Binance chain, and then that wasn't very successful, so they made Binance Smart Chain, which actually does have a lot of new DeFi protocols out there and on it. Recently they had some flash loan attacks, which happened on Ethereum a while back as well. So it's not just unique to Binance Smart Chain, but they've been, people have been getting the prices and the different DeFi instruments on BSC have been kind of being manipulated over the last couple of weeks as the markets come down. So I'm kind of keeping an eye on that. I want to see if it's like just, people were being not smart with the smart contracts that they were becoming involved in and not like properly auditing the code, if it was that, or if it's like some fundamental kind of underlying vulnerability that just Binance Smart Chain doesn't allow you to make like a super secure DeFi smart contract that can't be exploited in this way. My guess is it's just people FOMOing into stuff and not doing their due diligence is what's causing a lot of these exploits. Just putting a lot of money into a project or a protocol that's not been properly audited and vetted. That's my guess is what's happening, but it, they are a newer chain, so it's prudent to kind of keep an eye on that and make sure it's not some sort of like underlying vulnerability with the actual blockchain itself, because that would be very bad. You would not want to build on something that's got that type of vulnerability. So yep, keep an eye on that one. But right now they've got a lot of DeFi action going on over there. So yeah. Next, we've got Cosmos. I like Cosmos quite a bit. They use the Byzantine consensus mechanism. If your eyes glazed over, just put it in the comments. I'll try and get to it later. I'm not have time to jump into it right now. But they've got a focus on scalability and interoperability. They're somewhat established. They've actually been around for a decent amount of time. They're kind of taking more of a slow and steady approach. They and some other DeFi platforms and protocols have been built on top of them that have been rather successful. They seem like a pretty solid project. They're just kind of smaller, but they are interoperable with Ethereum, which is good. So is Binance Smart Chain. So is Polkadot. All of these that I'm mentioning are interoperable with Ethereum, or they wouldn't have made my list. Solana is the last one here. It's newer platform. The founder of the FTX exchange, or FTT, Sam, what's his name? Sam something. He's got crazy hair. That's all I know. But he's pushing Solana. It's a newer platform. Theoretically, it's got great scaling. We're kind of early on in their cycle, or their development cycle. And again, they have a focus on interoperability, scalability. Those are the two big pain points right now in the platform cryptocurrency race. But yeah, definitely a project to keep an eye on. The backers of it, that exchange, FTX exchange, and Sam are pretty smart folks. They've done some cool stuff. So I'm excited to see what they can do with Solana. But again, it is a little bit newer, so take that with a grain of salt. It doesn't quite have the track record that Ethereum does of like providing a solid service over time, which it doesn't sound like, oh, they've been doing this for 2 years, like woohoo. But in the crypto world, I mean, everything runs in dog time. So like 2 years is really like 14 years, in my opinion. So it is, you don't want to discount the fact that Ethereum has been serving a lot of people in the crypto world, what's been a long period of time, and doing it successfully. Yes, the transaction fees are really high right now. They are working on the scalability. There's some other layer two solutions, but it's something that long term, hopefully they'll be all right. And if not, we have these other kind of options here who are, up and coming and ready to step in if Ethereum doesn't do what it needs to. So those are the platforms. That's kind of the first question that you want to answer when you're looking at forming a blockchain company. What platform do I want to build this idea on? And this is more for a protocol. If you're doing an exchange, there's kind of a different set of considerations for your platforms. A lot of times you want to build that stuff. Not necessarily from scratch, but you really want to have a solid foundation that you're building your exchange on, because when the markets move, the traffic just goes through the roof and it spikes. And if you don't have a solid back end to handle that increased spiky load, then you're going to go down. And it's something that even Binance and Coinbase has not fully figured out yet. When we had that big crash, they were all running under reduced capacity and kind of being a little bit laggy. People couldn't log in. So obviously they have millions, tens of millions, hundreds of millions of dollars potentially at this point to make sure that doesn't happen, and it's still happening. So for exchanges, you really want to have good infrastructure, and for wallets, you want to have incredibly tight security, and your code has got to be so clean and tight, because people are trusting you to keep their cryptocurrency secure. You really got to have solid tech for all of these. So that's the first question that you want to answer. What platform do I want to go? What infrastructure route do I want to go? The second question here is going to be, what do my tokenomics look like, or what does my business model look like? For your tokenomics, that's primarily relevant for companies that are creating a new token or crypto that's going to be available for public trading. So things like your maximum supply, what's the issuance rate or the inflation rate, basically, how quickly do tokens come onto the open market and enter circulation, or if you did a big pre-mine, like you made a token on Ethereum, what allocations, what percentage of the team going to get, maybe you did a private sale up front, how much are the investors going to get, is there a vesting period, are we going to allow the early private investors to just dump on the open market as soon as it goes public, kind of how an IPO in the stock world works, what are you going to do? And all of these variables will be researched by the broader crypto investment community, and they will, decide if it doesn't look like it's well balanced, or it's not kind of conforming to the meta and the way that everybody else or the majority of the space is doing things, then they're probably not going to be that excited about investing in your idea or your project. So the tokenomics, especially if you're making a token or crypto available for public trading, got to have that stuff really dialed in. And make sure that it's palatable to the broader crypto world. If you're, doing an exchange, your business model for the exchange, how much are your transaction fees going to be? You're competing against Coinbase and Binance, which are taking 0.5%, 0.25%, and they also offer, the Binance token that will, further reduce those fees, and you can pay your trading fees in that. Excuse me. Primarily, that's how an exchange makes its money, is off of the trading fees. And then, they have withdrawal fees, and that's kind of another place where you can outcompete the competition if you're offering lower withdrawal fees for people to pull stuff off there. Obviously, you have to pay the network to mine the transaction for you, but yeah, those are kind of the two main points where users are paying you as the exchange, and you want to make sure that you're competitive in that area and have a good idea of how you set yourself apart from the competition. If you're doing a wallet, the business model for a wallet, those are a lot more varied, I would say. I mean, there's the hardware wallets like Ledger and Trezor, where $120 cost them $80 to make it. They charge you 120, they pick up 40, everybody's happy, and we're good to go. There's a lot of free software wallets and like mobile wallets out there. And to be honest, I'm not really sure how they make money, if they do at all. Some of them are open source and free. And I know a lot of them actually offer trading within the wallet. And so you're actually like a wallet / exchange, and then they make a little bit of money on people moving their funds from one crypto to another, or making an initial purchase of crypto, whatever. But at that point, you're basically a wallet and an exchange. And I think that's probably the most popular way to monetize a wallet software wallet. There we go. That's the word. So yeah, tokenomics, your business model, you want to make sure that those things are tight. And I mean, for the exchanges and whatnot, it's more kind of like business 101 type things. But for an actual token that's going to be available for trading, that's a whole new world, the tokenomics world. And there's specialists in that. And, we've helped people develop token models for, different projects. And that's something that you don't want to skimp on. Don't be like, yeah, we'll make 100,000 coins, and we'll give 30% of it to the team and 20% of it to the private investors and 50% to the public, and good to go, wash my hands, rinse and done. That's not the approach you want to take. You really want to understand dive deeply into the supply and demand and the issuance rate. How much is this thing going to inflate? What's my circulating supply going to look like? And what are other projects in the space doing? How much are they giving to the team? How much are they giving to private investors? Those are all good things and places to research for you. All right, I'm already at my 30 minutes. Sorry, Chill. I got one more slide, and then I'm turning it over to you. Okay, so last question here, costs. Obviously, this is primarily focused on development costs. Chill's going to talk about the regulatory costs. But yeah, this is going to be one of your biggest costs, is the development. We'll start on the right here. blockchain developers, like good ones, or who specialize in whatever language you're, coding in, whether it's Rust or Solidity or, one of the other ones, they're going to probably command a greater than $100,000 annual salary if you want to put them on the payroll, and that's US dollar. That's for one. That's for one of them, and you probably will need more than one of them depending on how big and ambitious you want to be, and how quickly you want to move your idea, to market and get it out there. So, yep, that's a big one. Excuse me. That's also something that Chill and I are happy to help with. We've got a great network of blockchain developers, and kind of a hiring network of people who are, either looking for work, or who, can outsource some of the work, or just put you in touch with people who are looking, because they're getting snapped up pretty quickly right now, and so you got to do some diligence, and it takes a little bit of time to get a blockchain dev. But yeah, let us know. We're happy to help with that if you're looking for some. Second point there, the CTO, the leadership team's got to have somebody with a strong technical background. This is an emerging technology. You need to have somebody who's making part of the decision-making process, who understands the technology like at a fundamental, deep level, or you're going to get so far off track. Don't let the marketing team run the show with this. You're going to just end up like a bunch of other projects did during the ICO boom a couple of years ago, where you raise a bunch of money, you have this great idea, and then you start building the idea, and you realize, oh, this is a lot technically harder than we thought, or this is not even possible, or this is going to take way longer, this is going to cost way more, whatever. And then those projects raised a bunch of money, went out of business, or had to close up shop, and nobody, everybody lost, and it kind of gave the space a bit of a bad name. So please don't contribute to the failure rate, even though it is fairly high for these types of blockchain focused companies. Make sure you've got somebody on the decision-making team who understands the tech and can be like, yes, this is possible. No, this is not possible. This will cost this much. It will take this long. You need a good CTO. And then the third point there, open source. The open source community, the blockchain space is built on it, right? That's how it started, that's how it's going, and that's where it's leading. This is all open source contributions, transparency, and it's really, it makes, in my opinion, makes for a healthier ecosystem, and a healthier like piece of technology, or more robust and harder to compromise and censor piece of technology, because anybody that wants to exploit it can see exactly what the code says. So if there's any vulnerability in there, they're going to be able to find it. It's not like a closed source, where you never actually see the lines of code. Like, you can go through and look at all of this and say, oh, yep, right there, look at that, they messed up. Boom, I made myself $1 million. So it's kind of a trial by fire type of deal, but it really, it hardens these protocols to the point where, Bitcoin, you can transfer $100 million for $5 and trust that it's going to go where you say it's going to go, and nobody's going to be able to stop it. That's the byproduct of having this open source kind of transparent trial by fire type of code and ongoing, development. So it's a good thing initially for you starting out as forming your company. It's going to be a burden versus a benefit. But in the long run, it's going to create a stronger community, because people are able to, if you put some bounties on your code repos, people will be able to help you out with some of the grunt work. And, you'll have, you basically won't have to pay these people more than whatever the bounty, whatever it's worth to you, to have this issue fixed on your repo. They'll do that, they'll collect their bounty, and now you've got a better product, and somebody in the community made a little bit of money and is now going to sing your praises to all of their developer friends. So it's a great way for marketing, and to get some lower skilled tech contributions. Also, hackathons are great. Sponsor a hackathon, put up some tracks at a hackathon, like, we're sponsoring anybody who does X, Y, and Z. They get $1,000 prize if they do that, and we incorporate it into our project or something like that, and then people get excited about it. you've got a whole audience that's watching and seeing what these people develop. And then at the end of the day, you know, you've got something. Usually it's a little bit lower skilled tech contributions. You don't see the specialists kind of, you know, scooping this stuff up. Sometimes you do, like it's not impossible, but I would say for bounties and hackathons, don't expect to get your like top level #1 priority solved. That's going to be something in-house, or, you know, you outsource it to some specialists and pay a pretty penny for it. That's, but, you know, grunt work stuff, fixing things, or like, you know, just introducing developers to your ecosystem. Great way to do that. And then they get excited, and sometimes they eventually join the team, and, you know, it's a great way to source devs as well. But yeah, so for the technical side of things, you want to be asking yourself, you know, are we going to in-house this? Are we going to hire a bunch of devs? Or are we going to outsource it to another company that kind of maintains a pool of developers? We may not get, you know, top priority unless we're their biggest customer. So, you know, do we want to have a bit more of a focus team and pay a little bit more for that and do it in-house, or do we want to outsource it? That's an important question. Second one there is code audits. It costs a lot to get a third-party code audit, depending on what you want to do. You absolutely want to do it, and probably you want more than one. Make sure there's no vulnerabilities in there, so you don't release this thing and it immediately gets compromised. That's going to set you back. You may not even recover from that. Also, community. You want to have a strong community. That's really the best way to market and promote your crypto. I mean, obviously a marketing budget is good, but your community is really going to be who defends you when people make a baseless accusation against you, or maybe a based accusation, but, you know, you want to be able to survive that. Your community will defend you. So take care of them, develop them, and you know, you can get some contributions from them. And they're a very important part of any kind of blockchain focused project, for sure. And then leveraging the open source. I already kind of talked about that a little bit. Final considerations, you know, other costs that are kind of outside the technical and the regulatory that Chill's about to talk about. You know, marketing, obviously you want to make people aware of what you're doing and invite them to join your community. Non-blockchain developers, so some front-end people who, you know, who's doing the website, who's you know, taking care of issues in the wallet, you know, smaller issues. You're going to have some, you want to want some non-blockchain devs on the payroll. Ongoing development, absolutely. This is not like I created a thing and now I'm never going to touch it again. Like, this space changes day to day and sometimes hour to hour. New vulnerabilities are discovered. New breakthroughs are made. You want to, this is not a static type of project. I mean, I know no tech project is static, but this is like above and beyond that. Like, you need to have and plan for ongoing development, or you're just going to get out competed and left behind. There's so many people trying to get into this space. It's very competitive because there's so much opportunity. Make sure that you've got enough budget and a plan. It's part of your business model that your ongoing development is taken care of. So yeah, that's it for my presentation. I haven't looked at the chat yet. Hopefully we've got some questions in there. We'll get to them later. But you know, the last thing there, regulatory costs. Chill is going to talk about that. So yeah, I only went 10 minutes over, Chill, but take as long as you need. I know you've got some great information. And I'm going to turn it over to you, turn my camera off, and I will still run the screen share. But yeah, you ready, Chill?
Yes.
Awesome.
Thank you, Matt.
Take it away.
Sure. Yeah, so like Matt mentioned, you know, other than the technical cost, one of your, you know, largest chunk has to go towards the regulatory cost. And one of the main regulatory considerations I would consider would be obviously cost, the time it takes to set up your company, also potential ongoing compliance requirements that you have to comply with, and also the history of erratic regulatory changes. Like, for example, I would definitely not consider incorporating in China. Let's just see. So obviously the three main markets would be Europe, Asia, and USA. And let's start with the US. So the biggest benefit of incorporating in the US is the reputation of the country. If it's an asset tokenization project, then once you decide on the tokenomics, I would highly advise you to reach out to a securities attorney or engage a blockchain attorney. Me and Matt usually recommend a couple of blockchain lawyers who have been in the space and understand both technology and regulations. But this is definitely something that you want to make sure you comply with securities guidelines, and no one's going to knock on your door. However, when it comes to exchanges, you will require, especially if your exchange is crypto to fiat, you are required to have a money transmitter license. So you need to obtain a money transmitter license in all 50 states plus the 3 overseas territories. And just purely in legal costs, you're looking at close to at least $300,000 if you get a startup package. And plus application fees and miscellaneous costs. So it's about $500,000 when all said and done. It's a lengthy process. You have to go state by state. Some states are harder. In some states it's harder to obtain, like New York State requires a BIT license that alone sometimes costs $100,000. So that is a pretty large cost. Now, if you're looking at incorporation, the top 5 states, and obviously all the other states are now moving in that direction, but California started out enthusiastically in 2014. They were very pro crypto. It's actually, Bitcoin is a legal form of payment there for buying goods. But then since then, they have not been on the forefront of pioneering crypto regulations. Colorado also started out very enthusiastically and took 2 years to finally pass the Digital Token Act. And since then, we haven't had any other pro-blockchain legislations. Wyoming, on the other hand, is up to 24 pro-blockchain legislations. So they are definitely the leading hotspot. Another thing I love about Wyoming is it has the strongest privacy laws. There's no franchise tax, income tax, crypto tax, capital gains tax. So it's definitely a long-term pro-blockchain stable state to incorporate in. Ohio has started the ohiocrypto.com, so you can pay sales tax. And employees, obviously, they can withhold tax in Bitcoin. And Texas is also an interesting location if you're trying to start a crypto mining operation. They have very low energy costs, and there's also no money transmitter license requirement for selling Bitcoin, for conducting transactions, and for exchanges. So that's awesome. You just have to focus on serving the Texas-based users. Okay, so like I said, it's a reputable location. However, the costs are astronomical, if you ask me. So let's see what other options you have if money is a concern. If you could just click, yeah, thank you. Okay, so Estonia is by far one of my favorite locations to incorporate. So let's see, why should you incorporate in Estonia? So here's 5 reasons. Number 1, it has a crystal clear regulatory guideline. Number 2, it has short processing time. Number 3, it's one of the cheapest. I say one of the cheapest because it's 2 European locations that I highly prefer. 4, any profit that you make, if you reinvest it in your company, you do not have to pay income tax on it, which is great. It's a great way to grow your company, especially if you're in like seed startup stage. And number 5, they have something called e-residency, which gives you a number of rights, and you can manage everything digitally, and you have similar rights to those who are Estonian citizens. Now, what do you require to start an exchange in Estonia? You require something called a crypto service provider license. You require this whether it's a crypto to fiat exchange, a crypto to crypto exchange, or if it's cryptocurrency wallet. How long does it take? Typically, it takes about 60 days. When it comes to time frames, I like to tell clients, give clients a little bit longer, because there's sometimes delays. So if you think about 90 days, that's realistic to obtain your crypto service provider license. Now, you have to accomplish 5 requirements in Estonia. So one of the first requirements is you have to pay an initial capital of 12,000 euros. You have to pay this in advance. You have to have a corporate bank account in Europe, and we can obviously, this is one of the hardest things to well, not just in EU, but even in the US, it's very hard, and it's increasingly hard to find good banking partners. We can obviously help you with this, but most banks, due to the compliance KYC requirements, they stay away from cryptocurrency related businesses. So it's kind of challenging to find a banking partner, and some of the requirements of having a cryptocurrency exchange requires you to actually have a fiat banking partner. So it's a hurdle you have to overcome. Number 3, you have to have an office in Estonia. It doesn't have to be a huge office, but you have to have a physical office, a physical location where Estonians or anyone can basically come and audit you. You also, number 4, you have to have a management, and the management has to be local. You have to hire at least 1 director. And you have to have a compliance officer who is based in Estonia. And naturally, everybody has to pass a criminal background check. Okay, so another location that gets has a very fabulous reputation. Personally, I don't enjoy working with Malta. It's everybody's on island time. It's very hard to get meetings scheduled. Sometimes it takes you 2 weeks to set up a Zoom call, on paper, and if you Google things, you're gonna find that they will tell you that it takes about 4 months to obtain a cryptocurrency license. In reality, however, it sometimes takes 8 months to a year, and there is no guarantee. Now, so what are the benefits of Malta? Obviously, it has a very pragmatic regulation. It's a reputable jurisdiction. It has great consumer protection, market integrity, financial stability. All the rules are in English, which is awesome. And there are no nationality restrictions. Now, what are some of the requirements? So you have to have, just like in Estonia, you have to have a physical presence. You have to have an office. You have to have a credible virtual financial asset agent. This person is going to be the liaison between you and the MFSA, which is the financial regulatory body in Malta. And everybody has to pass a so-called financial instrument test. You also have to have a money laundering reporting officer, a compliance officer, a risk manager, and the minimum share capital is pretty high. It's 730,000 euro. And banking is also an issue. So with Malta, I would say if you're already an established cryptocurrency exchange, then it makes sense for you to. Binance and some of the most reputable exchanges are incorporated in Malta. But if you're not established, about 60% of the applications get rejected typically, and this is not just in Malta, but in most countries, and I can't really go into the details, but there's specific mistakes because there's a bunch of documents that you need to fill out. You have to have a business plan, and what regulators are primarily looking at is the risk. So, for example, like, what is your IT security? What is your, has your code been audited? What is your AML KYC compliance? Who are the people working for you? What is their professional reputation? What are they, who's your risk manager? So there's a lot of things that, specific things that they're looking at when they are determining whether or not you should receive this license. And then even if you receive it, sometimes it takes 8 months to a year to receive the license. You might run into the problem that it's extremely hard to find an actual banking partner. So I only recommend Malta if you are an established business and you can show some proven track record. Okay, next one, please. Okay, Switzerland. So in Switzerland, there is actually no such thing as a crypto license. There's something called fintech license, which relates to banking, but there's no ICO exchange activity related license. So what you need to obtain is a financial intermediary. So there's 2 levels to this. You can be at the banking level, obviously, and you can be at the exchange level or over the OTC desk level. FINMA, which is their financial regulatory body, takes about 6 months to obtain. Now they have a very robust banking system, and they have a great. You have to possibly hire a tax consultant, and it's not the cheap. It's one of the most expensive locations because you have to engage lawyers in Switzerland. So, but obviously, once you're established, it's a very pro and pro blockchain territory. And also it has one of the strongest privacy laws in Europe. Now, Lithuania is actually my second favorite location. And the reason is because they have an exchange and a wallet license that takes about 2 weeks to actually register. So the whole process to set up a wallet or set up an exchange in Lithuania, it costs, you can get away with something like 8,500 euros if you just want purely the license and not the company formation or the banking relationships. You don't need to have a local person there, and you can be like a one-man show. So I really like the openness of the regulatory friendly environment that Lithuania has. Also, the minimum share capital that you are required to have is 2,500 euros. And to incorporate in Lithuania, it takes about 10 days. So start to finish, I would say it takes about 2 months. If you really just want to sit back and relax and not have to go through, finding a banking partner and, incorporating and, setting up all the paperwork for the exchange application, the whole process would not cost you more than 30,000 euros. So that's like the high end. So because of the reason I love Lithuania as overseas location. Next, please. Okay, so other countries to consider. So yeah, Germany has a 0% tax, so it's it's quite crypto friendly. But one of the disadvantages is most things are in German, so you're gonna need someone local. So the way it works, they just recently last year they passed some new regulations surrounding the licensing, and the way it works actually is that in practice the law is not very clear. So therefore you're gonna need a local attorney to help you guide you through the process. The proof of starting capital is 120,000 euros, so it's not the cheapest. And you need a proof of reliability of the holders, that they have a professional competence. You need IT strategy, security. Obviously, you're in Germany, okay? And a solid business plan. So Luxembourg is another great location. Gibraltar, I'm not going to get into that because I literally just have 5 minutes left. Okay, so next one, please. Okay, so Asia, so Japan. So thanks to Mount Gox, and I'm probably the only person who is grateful we had Mount Gox. Japan was actually launched into the future, and it was a blessing in disguise because it accelerated their regulatory infrastructure. They had to deal with it. Once you're in, you have all these unhappy people, you have to deal with it. So they were one of the first countries to, say that Bitcoin is a legal tender, and they established a very robust regulatory framework for cryptocurrency exchanges. It's not the cheapest, but it's very pro blockchain. It costs about 10 million yen. You have to have that capital. That in US dollars, that would be close to 91,000 US dollars. You have to have a solid corporate structure. You have to have a solid KYC and AML procedures. Again, here, there are some common mistakes people make. So you have to make sure, your policies are up to par. Some of the requirements, you require to have 5 to 10 employees, an authorized obviously the capital requirements, the 10 million yen. You have to have a physical location, so a location in Japan. And the total process may cost you something between 9 to 12 million yen. Singapore. So Singapore, crypto is legal in Singapore, and the taxation system is pretty mild. You do need a special license. It's called the DPT license. It's a digital payment token. And this is further classified what kind of digital payment token license you require. So it can be a money changer, which is the US equivalent of money transmitter license, or it can be a standard payment institute license or a major payment institute license. And the difference between the two is if you your capital is less than 3 million, then you need a standard payment institute license. And if your capital is higher than 3 million, then you need a major payment institute license. Now, they're very, very, very strict on AML CFT. And some of the risk that they're looking at is like what happens if you lose the funds due to insolvency, or what happens, if your technical audits are not up to par, or they are very advanced when we look at the technical interoperability as well. So everything's assessed both from the technical as well as the regulatory perspective, and they're just measuring risk, and you can be rejected based on not meeting those minimum requirements. What are some of the main requirements to start, to file for a cryptocurrency exchange? Well, first of all, you have to have an office, again, in Singapore locally. 20% of your shareholders or the controllers have to be approved by the MAS, which is their financial regulatory body. You have to pass the audits, you have to have inspections, and the whole process takes about 6 months. And then there are a number of restrictions that you have to pass on to the users. So, for example, if you have the major payment institution license, you have to restrict the users from holding more than 5,000 in their account. and preventing them from transferring more than 30,000 in their account. So there's like lots of little stipulations and strings attached to these licenses, and there's like an ongoing heavy compliance that you have to also factor in as a cost. Okay. And I think these are there are more locations in Asia, but these were the top locations that most people are considering. Yeah, so like I said, cost, time, again, just to repeat, cost, time, ongoing compliance, and the history of erratic changes from the regulatory bodies is what you want to look at when you're considering starting a cryptocurrency exchange. Ooh, and I managed to finish. Way to go, Jill. Okay.
Awesome. I'm just looking at the stream here, make sure we're still good. You want to turn your camera back on there, Jill?
I did, no?
I don't see it. It's just blank for me, unfortunately. No worries. But yeah, so that's it for the presentation. We came in there you are, right at an hour, which is impressive. Yeah, so hopefully now you have a better idea of kind of what it takes on the technical development side and on the regulatory side. If you're looking at forming some sort of blockchain focused company, you should have a much better and clearer idea. If you still have some questions or some concerns, please reach out to us at hello@willandreimer.com. That's our consulting firm. And we're happy to have an exploratory call with you and work through some stuff and see what see how we can help you. The things we did not cover are kind of the more typical like businessy things, like your marketing budget and the promotion of it and the pre-sale and the funding and all of that. I mean, those are important considerations. They're not really blockchain or crypto specific. They kind of apply to most companies that you would be forming. We are knowledgeable in that area and happy to help with those things, especially on the funding side of it. But didn't make sense to incorporate into this presentation just for time and trying to stay on topic. So yeah, I think that's going to do it. Oh, good. Okay, we have some questions here in the chat. So yeah, reach out to us, hello@willandreimer.com if you want to get a hold of us. I will stop the screen share now and let's answer some questions. Okay, Krista says pros and cons of an ICO versus an IPO. So an IPO, an initial public offering, that's the traditional like stock world term, as I understand it. So I'm assuming that you're referring to that. The pros of that over an ICO is it's much more regulated. So you've got specific disclosures that you have to make. You got to register with the SEC, and so you've got you're basically putting your reputation and potentially risking jail time if you do something and try to rip a bunch of people off, or you don't do what you're supposed to be doing. So for an IPO, there's a lot more accountability, I would say, but a lot of these blockchain companies and projects, they don't want to be just tied to the kind of the traditional stock world. They want to be accessible to a global audience. And they want to be available anywhere people have an internet connection and a crappy smartphone or better. And so that, if that's your target audience or that's who you want to be able to take part in your project, then the IPO doesn't really make a lot of sense. The ICO, and there's, getting a bit more regulatory clarity there. I mean, the SEC in the States has been going after some of these projects who are like blatantly selling securities that we're not registering with them. And so what you've seen are people just blocking United States customers or people from more kind of strict regulatory countries. They're not allowed to participate in these ICOs. So it's like geo restricted. And then, anybody anywhere else is able to take part in it. And then after it's in like wide circulation, then the Americans and the others can kind of come in and purchase it at the market rate, but you miss out on that kind of initial offering. So I mean, it just depends on what you want to do. If you're doing a cryptocurrency focused project, an IPO really doesn't make sense because, I mean, there's just not, other than Coinbase, there's really not, I mean, Binance could probably do it. Maybe FTX exchange could do it. Though it's really mostly exchanges. I mean, Ledger could probably do it, the hardware wallet company. Those are the only, like, the real big projects at kind of the top of the food chain are really the only ones that are going to make sense for an IPO. Everybody else, smaller market cap, smaller audience, and wanting to be globally accessible, ICO is going to make more sense for them. Chill, you want to take that next question from Coretta?
Yes. So what, broadly, where do you rank the US in relation to other countries in terms of regulatory friendliness, say Wyoming and Texas? So Wyoming is obviously, the best states to incorporate in the US. But especially if you're trying, depends on what you're trying to do. If it's just a blockchain company, yes, go Wyoming all the way. I'm pro, keeping our innovators here local. If you are trying to start a cryptocurrency exchange, for example, Wyoming, it would be just one money transmitter license location. So that might not be the best approach for you. It would cost a lot of money for you to get your money transmitter license in all 50 states. So I would probably, I mean, depending on your budget, I would probably start in Estonia or in Lithuania, start making some profit. And then once I work myself up, then come back to Wyoming. So I would take that approach. Now, one of the advantages of actually walking through the regulatory hurdles here in the US first, even though there's a high cost associated with it, is that you are more likely to find investors and you're taken more seriously if you already have your licenses in the US. So hope that answered your question.
Yeah. Well, I have a question kind of related to that. Like, would you say that the United States they're more strict, but because they're more strict kind of compared to other countries, that the people sort of trust that you're on the up and up and you're not going to like run a scam? And so that's kind of what you were just saying. And you attract more investors because they're like, oh, you're kind of being held to a higher standard here. It's a lot stricter in the US. So, we have more faith that you're not going to just like run away with the money because, you could end up in jail.
Yeah, that's exactly what I was saying, because the regulatory scrutiny is so high that if you pass this is like, if you can make it in New York City, you can make it anywhere. So but on the flip side, if you're starting out, you don't have that budget, for example, like even Switzerland is kind of expensive, and we know that they have very strong privacy laws, and because Zug has all these privacy laws, and they attracted a lot of scam projects. And it's still like a reputable location, but so it's just, I mean, this is a gray area.
Yeah. Okay, gotcha. And actually, now I'm having questions here. But so if you incorporate in like Lithuania or Estonia, are you able, like, if you make an exchange there, are you able to offer exchange services to everybody in that part of that like Eurozone, or is it only for that country?
Most of Eurozone, so there's some countries that require you to have, again, this is a case by case.
It's kind of like in the States.
Some countries, like Germany, for example, I think recently passed that they do require you to have a German license if you are engaging German consumers. So now, if you're planning, like, you could be covering the Eurozone, but not Germany.
Got it. So it might be helpful to think of it kind of like, how you've got to have state by state requirements here in the States. You kind of have the same thing in Europe in the Eurozone, but that's not the best analogy because those are separate countries and some of them don't require anything because they're just like, yeah, you're in the Eurozone, you're good. Where the States is still more restrictive than even that, I'm pretty sure.
Yeah, I mean, it's similar to the US as well, right? Like you have to go in each 50 states, and you can't engage someone in Montana if you don't have a license there.
Got
So,
it.
so yeah, but typically, once you have everything in place, the chances for you to obtain your license is just a matter of time and cost.
Time and money.
Yeah.
All right, cool. Let's see here. I'll take this next one. How do people generally find business partners to start a blockchain company? Well, it depends like on what side of the equation you're coming from. If you have if you've been involved in the cryptocurrency or the blockchain space, you have good experience with it and, kind of built a network in the space. And it's actually fair. There's a lot of people who don't have that knowledge and want to come into the space and want to work with you. I would say it's a lot easier going that route versus trying to find someone already in the blockchain space to partner with. If you have a cryptocurrency idea. If you're just talking like purely supply and demand, there's a much higher demand for people with blockchain, but business partners who have blockchain experience versus people without it. And so, they're just harder to find. If you're local here, I don't know what location you're at, the person who's asking this, but most major cities, whether it's Europe, Asia, America, South America, I mean, anywhere, most major cities have some sort of cryptocurrency and blockchain type meetup group, community, whatever. That would be your best place to start, is just get involved locally. And you're going to meet a lot of people who are passionate about it, who are, the crypto community is awesome. And I know on Twitter, everybody gets kind of maximalistic and tribalistic, but in person, I've found that people are a lot friendlier and they're just excited about this new technology. And if you're excited about it and you want to learn more about it, they're more than willing to help you out. And if you have some ideas, or you're looking for a partner, or you want to fund an idea, whatever, start locally, and kind of build your network from there. That's probably the best advice I can give you. If you're in Denver or Colorado, come check us out at the Denver Crypto Group or the Open Economy Initiative. And obviously, Chill and I have a great network here. I mean, we work with people all over the country and internationally. So if you have some specific ideas or some specific requests or needs, let us know. I'm sure we can help you with it. If it's more just general, how do I find people? Start local.
Yeah, Twitter brings out the worst in people. But in real life, everybody's awesome.
Anytime there's zero accountability, the mob rule mentality kind of takes over, I feel. But I mean, that's my personal opinion.
Cool.
What's that last one there? What groups, forums, blogs do you follow to keep up on the blockchain industry? I'm just started in learning on this learning journey. Chill, you want to take that one? I can chime in too.
Yeah, I mean, right now, so the blockchain industry used to be just very tiny and you could just follow it all. And then after that, now we had this big bang and all these different sections. And it just depends on what area you're interested in. So if you're like interested in DeFi, you have to engage with those communities. If you're interested in like privacy technologies like myself, then you engage with those communities. You just have to really focus in on what you're trying to learn, because it's no longer that you can just follow every news. I mean, you will go crazy. So that's
get specific on what you want to do. And I mean, there are some like high level sort of overview type stuff. I mean, Andreas Antonopoulos has a lot of great like primers on, what is a blockchain? Like, what is Bitcoin? Why is it money? Or why is this revolutionary? Why is it cool? Basically. So I'd highly recommend Andreas Antonopoulos. He's going bald. His little logo is like his widow's peak. It's pretty great. He's awesome. He's like OG, making amazing content for like way before anybody was even thinking about Bitcoin, other than the cypherpunks and the people buying weed on Silk Road. But so check him out. He's good. I mean, I know we both ragged on crypto Twitter, but I do get a decent amount of my information from people on there. And you just got to be really careful about who you follow and make sure it's somebody that is an expert in this area, because a lot of people will pretend that they know everything when they don't know anything. You want somebody who's building something in the ecosystem, right? So if you're interested in learning more about DeFi, then find someone who's building something cool in DeFi that people really like and follow them. And that's a great source of information for A, their project that they're working on, and B, as things in the DeFi space change or controversies come up, most of the time they'll offer a comment on it, or maybe even write a blog post on it. And you can read that and kind of keep yourself informed by the people who are at the forefront of whatever kind of facet of the crypto sphere you're interested in. I think that's a good secondary way to do it. Taylor Monahan, she's got the My Crypto wallet, or the My Crypto app. I follow her. She does some hot, spicy takes on stuff, and she's very entertaining. It's maybe not for everybody. She can get pretty, she just lets her opinion be known, which I love. But yeah, she's made a great, amazing wallet, and has a good take on a good read on a lot of things. I really like her perspective. So that's somebody that I follow to kind of keep up to date on the state of Ethereum ecosystem relating to the wallet, and other technical developments that might affect what her project's doing. So yeah, that's my take on that. Cool. Well, I think we got through all the questions. Yeah, I don't know, Chill, is there anything else we need to plug, or should we wrap this thing up?
Yeah, I think we can wrap it. One more thing I wanted to mention is that nowadays you can also just go into a market and purchase an existing company. That's another solution if you don't want to do any of the work, and there's an exchange that's already registered and running, and you want to purchase it. That's another shortcut.
We can help with that. You just want to make sure you do the correct due diligence, and you're not buying something that got hacked last week and that's why it's up for sale because they lost all the users. That's don't want to do that. But yeah, that is a great shortcut if you got the capital for it. And a lot of this is fairly capital intensive. I mean, everything that we've listed here, from a wallet to an exchange to even a blockchain project. I mean, unless you're a developer and you've got some serious coding skills and maybe a couple buddies and friends who would help you with it, you're going to need some sort of either outside investment or self-funding to get it to a point where you can release it onto the open market. But I mean, that's that's entrepreneur lifestyle anyway. So yeah, that's what we can really help on most facets of this. So yeah, just let us know, and we're going to keep putting out content. Hopefully this is valuable to everybody. I really think it is. I have a feeling that down the road, when we get our next leg up in Bitcoin, we're going to have a bunch of comments at the bottom of this video, people asking things that they weren't able to ask or tune in on the live stream. So I'm calling it now, I guess.
Right. Thanks everyone for joining in.
Yeah, great stream. Appreciate the support, and we'll see y'all next time.
Bye.
Bye.